isn't just business news, we're news for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Good morning, I'm Agam Vakil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. But first, the headlines. Benchmark indices trade weak ahead of the RBI policy, and the Nifty trades below the mark of 10,100, close to its 100 DMA. And metal stocks are at top losers on after Nifty LME Base Metals Index sees the worst decline in over 2 months. And the RBI Monetary Policy Committee may choose to stay put on key rates, shows a Bloomberg poll of 46 economists. And Future Supply Chain is looking to raise 650 crores from the primary markets. The IPO opens for subscription today.
Okay, let's take a look as to what's happening in the markets. And as we speak, there has been some weakness because Nifty has slipped today's low. If you could just pull up the intraday chart there, 10,077. I just want to remind our viewers, the 100-day moving average for Nifty stands at about 10,070. So if that gets breached ahead of a very important event, there is RBI monetary policy today, and we're seeing a bit of cautious trade. Nifty so far was trading in the range, but in just last 2 to 3 minutes, we've seen that sell-off coming about. Sensex 2 is trading in the red. Bank Nifty, which will be in focus, that's holding above the mark of 25,000 and protecting the 50-day moving average, which stands somewhere about 24,933. That's going to be the index which will be in focus. But I just want to highlight the Nifty PSU banking index has been weak since yesterday. However, in the second half, there was a bit of recovery. But you've got heavyweight stocks like State Bank of India, ICICI Bank and HDFC Bank, which since the morning session have seen a bit of negative tick. So SBI down almost 1%. ICICI 2 is trading in the red. A bit of respite when you look at the broader markets. Mixed trends are what is being suggested. The small cap index is trading in the green. However, the mid cap index has not seen major cuts. It's just down about 11 points. And the advanced decline ratio, the NSE stats, that graph will tell you the clear picture because so far, if you look at the advanced decline ratio, it has been in favor of the advances at least. So that's some respite if you look at the markets. India volatility index, that's been a cause of concern in the recent past. It's been trading at elevated levels. We've not seen much of move coming about, but the cool off has also not been of higher magnitude. So just trading below the mark of 15. Let's just pull up the contributors chart and tell you which are the stocks which are probably capping the moves on the downside. That's Reliance Industries, a biggie. Remember, we did a check on this yesterday where if you look at the chart, the stock tends to see a bit of recovery as and when it approaches its 50-day moving average. So that's the highest contributor. The IT packs been pretty strong. Infi, HCL and Tech Mahindra are trading in the green. Whereas on the losing side, I did mention the financials are weighing heavy. So HDFC, SBI, ITC and ICICI Bank are the one which are probably contributing to the losses so far. But Agam, mixed trends from broader markets. Any stocks which are standing out?
Most certainly mixed trends, Navneet, but I'm looking at gains and a little bit of a reversal in Reliance Naval and Engineering, where the stock has now moved about as much as 7.6% currently. Bajaj Electricals is the other stock which is advancing nearly 6% today's day of trade. That's followed by continued strength in Videocon Industries, which has been buzzing over the last few days as well. We have Sonata Software as well as VIP Industries also recovering from the kind of weakness that we've seen over the past few sessions. In terms of some of the weaker counters, there is substantial weakness in the likes of Shilpa Medicare. This is, of course, on account of the US FDA issues, and that's the reason why you're looking at a weakness of around 4.5% there. Hathway Cables declining by as much as 3.3%, and some weakness in Radico Khaitan, perhaps some profit taking. That's the reason why it's down 2.7%, because it has been seen a substantial up move over the past few days. And City Union Bank among the others, which is looking at a little bit of weakness. But on the whole, fairly evenly poised, at least as far as the broader market is going to be.
Okay, that's about the markets. But on trend spotting today, we discuss the road ahead for the Agri space as we connect with Rahul Singhal from the Emkay conference. We decode the September quarter earnings for Plastiblends as we connect with the Vice Chairman and Managing Director of the company, Kabra. We put the spotlight on what's making the aviation players fly high as we connect with Umesh Mehta of Samco Securities. On to our first trend of the day then, with fertilizer prices bottoming out in the last few quarters and the fertilizer subsidy as a percentage of GDP being at its lowest level that one has seen since 1984. Better days seem to be around the corner for players in the agri space. What can one expect from this sector going ahead? Let's get a broader perspective on this. Joining us on the show is Rahul Singhal. He's an agri input dealer at Emkay Konnect at the moment. Hi Rahul, good morning and thanks a lot for joining us from that conference today. Rahul, I'm just going through the Credit Suisse report which mentions that the prices have bottomed out, and there was a commentary made by the Union Minister of Fertilizer and Chemicals yesterday where they've said the outstanding subsidy of the sector, which somewhere stands around 22 to 23,000 crore, will be cleared by the end of this fiscal. Just want to get a check what's happening with the sector, how are the trends looking with regard to prices, and also tell us, do you see the subsidies being cleared by the end of this fiscal?
Regarding to this subsidy on the fertilizers, at the bottom line, the farmers, they are getting the subsidy products directly, but in the future they are going for this DBT. In that time, the subsidy amount will reduce, the burden of the subsidy will reduce at the government level. At the farmers will not be getting directly the subsidy, they will be getting in their bank accounts only. The farmers which actually need the subsidy, they will get it.
Well, considering the kind of monsoons that we've seen, can you give us an idea about the capacity of the farmers to buy agri inputs when you consider their capacity of buying this year as against what we saw last year? Has there been a substantial increase considering the kind of monsoons that we've seen this year?
The capacity of the farmers is the same. They are going for the inputs which they require actually for this going Rabi season.
Okay.
The capacity has not gone down.
Okay. So roughly, if I were to ask you what would be the capacity utilization levels of these plants in India, where would that number stand at?
Sorry, can you please repeat it regarding?
I was just asking overall the fertilizer plants which are there in India, what would be the capacity utilization levels that they're running at currently?
The capacity utilization, they are running at a full level.
Okay.
Since the requirement of the fertilizer is in almost all the farmers they require. And the capacity of the plant, they manufacture full quantity and supply according to the needs of the state.
Rahul, are we also seeing any sort of, augmenting the capacity of these plants, let's say in the next 3 to 4 years, because there's been a lot of chatter with regard to reducing dependence on imports when it comes to fertilizers?
Yes, what we see the government policy, they want to actually reduce the imports. They also want to reduce the usage of urea. They want to increase the usage of potash and this phosphatic fertilizers, and the capacity of production of these potash and phosphatic fertilizer is less in India. So they want to increase it, and the companies which of these dealing in these companies, these products, will actually increase their capacity.
Okay, Rahul, I don't know if you are...
The requirement at farmer level is increasing.
Okay, Rahul, I'm not sure if you're well versed with the acreage, but in your opinion, or if you would have an idea, How would you compare this year's crop acreage, that is the total area, as compared to what it was last year? Because this would also, I'm assuming to a certain extent, imply something on volumes for agri inputs.
Actually, the acreage, if you talk about the total acreage under crop, it is almost, it is growing, but the shift of crop is there every time from a particular crop to, for example, in north, if we speak about this time in Rabi season, farmer is going more for the sugarcane crop and lesser for the wheat. They want to shift from wheat to sugarcane as the sugarcane prices are good and the farmer's income is increasing in sugarcane.
Okay, so Rahul, then how does this impact the sale of and perhaps the shift of different agri inputs? So where does it shift from? What sort of agri inputs are used these days now as compared to what was in trend last year?
If we talk about inputs in this, for example, in sugarcane, the companies having products about the weeds of weedicide for sugarcane or insecticide of sugarcane, the sale of this product will increase and the volume of product being used in wheat will actually decrease.
Rahul, before we let you go quickly, just want to get a ground check because I'm sure you'll be interacting with the people in this industry day in and day out. What has been the impact of farm loan waiver, which was perceived to be a positive news for the sector as well as the farmers? Are we seeing any sort of positive impact on the ground?
Yes, the farmer is now more comfortable. He can buy again the agri input easily by getting a new loan or utilizing his own finances. The burden of earlier the loan was getting into use lesser agri inputs which were affecting the lesser productivity. Productivity we can increase once we use the good agri inputs.
Okay, Rahul, we'll leave it at that. Thanks for joining us and giving us your perspective on the agri inputs in India and how that can see new trends bringing in. Of course, as mentioned, there is more tilt towards the sugarcane crop. But we'll move on to our next topic, and that is Plastiblends, which has reported a 12% jump in its September quarter revenue, while its profit halved. And the counter is trading with cuts of around 6 to 7% currently. But to help us decode the quarter gone by in further detail, we are in conversation with the company's management on the phone line, the Vice Chairman and Managing Director, Mr. S.N. Kabra. Hi, Mr. Kabra. Thanks for joining us. Good morning to you.
Good morning, yes.
I want to start off with the contraction in margins that we've seen for the quarter. Can you tell us about the reasons why that has come about and whether or not this is just a one-off, or can we see a continuation of this trend?
Yeah, definitely it's a one-off thing. It's because of the GST introduction from the 1st July. As a result, when it was introduced, first about 15 days, there was no business transactions took place because of the formalities and other things. And so effectively, it affected our total turnover. Then, but statistically, we did not pass on the increase in the prices to maintain our top line. And as a result, there is a drop in the profitability.
Mr. Kabra, are you suggesting there was a reduction in price and that's the reason why the numbers are bad? Because even the first quarter earnings didn't look great at all. We saw depletion in margins, no major growth was seen. Go ahead.
It's the same reason because the first quarter, last 15 days of June, situation was similar, which was first 15 days in the month of July. As a result, first quarter was similarly affected. And second quarter also has been similarly affected. So because normally we pass on whatever the changes in the raw material prices, input costs, whether reduction or upward revision, we pass on to the customers. But this time, because of this situation, we did not pass on any increase in the raw material prices, mainly due to the crude price increases and also prices of our major inputs, polymers, titanium dioxide and carbon black, increased substantially. but we did not pass on, and we tried to absorb that.
Are you
in
doing
our margins.
anything
Yes.
to mitigate the input cost pressures in the second half of the fiscal?
Yes, we are gradually now trying to aid that thing, whatever has been the increase in the prices. Gradually, we are passing on, and yes, it may take still some few more months, but then we'll totally pass on as usual, and we will definitely return to our normal margins and normal raw material costs.
Okay, so Mr.
And
Kabra,
in fact,
yes, please go on,
In
sir.
fact, one thing I would like to tell you.
Yes, please.
July was a very bad month, and then August was definitely much better than July. September was better than August. October was better than September, and November was in fact the highest ever sales for the company.
Okay, so are you implying that we can expect normalcy in the third quarter to resume, and the fourth quarter can see operations back to complete normalcy?
I see the fourth quarter should be about normal. Third quarter still there will be some pain, maybe there. But then we expect next year there has to be a phenomenal growth in the market and the profitability from next year onwards.
Mr. Kabra, you operate in an industry which is, correct me if I'm wrong, 50% of it is unorganized. This was the first quarter of GST implementation, and I guess you have around 15 to 20% market share of the organized sector. What has been the impact post the GST implementation? What sort of market share increase now that you're targeting in the second half?
See, as I said, month of November, we have already seen the highest ever sales for the company. Now there is about 40%, 40 to 50% unorganized sector in this industry. And that benefit we are going to get slowly, and especially as soon as the e-way bill is introduced, we are going to get the full benefit of that. And whatever that is going to be unorganized sector is going to gradually go down, and that benefit we are going to get in the coming months, and maybe by next year when e-way bill is introduced, it will be a phenomenal share which we will be getting from the unorganized sector.
Okay, Mr. Kabra, so I want to quickly understand what is your current capacity in terms of production, and if at all you are looking to go in for expansion, what is your utilization levels, and based on that, is there any expansion on the cards?
Yes, last year we started a new unit at Paisana in Gujarat, and there we increased our capacity from 80,000 tons to 125,000 tons. But all the infrastructure is there ready to increase that further to 200,000 tons. So within another 1 year or 2 years time, we will be increasing our capacity from 80,000 tons to 200,000 tons, 2.5 times.
You were also looking to increase the export pie in your overall top line. Could you tell us so far how much of your top line comes from exports, and what is the kind of
export is about 27-28%.
Okay.
It's our export this thing. And there also we had little bit effect because of the rupee appreciation.
Okay.
So whatever growth we wanted, we could not achieve. But over the period, definitely we are going to have growth in export also. And over the period, our target is to take the export to almost about 50% of the total sales.
Okay, 50%. Also, your key clients, if I'm not mistaken, are the likes of Supreme Industries and Reliance Industries. Now with GST, I'm sure organized players like you are going to benefit. Any new client addition that we've seen post GST implementation?
Yes. Every month we are adding about maybe 20-25 clients. And of course, basically all raw material manufacturers, polymer manufacturers, as well as all processors of plastics are our potential customers. Reliance, Supreme are one of the large customers, and Reliance is a raw material also, for raw material also, and for their finished goods also, they are buying master batches from us.
Okay, Mr. Kabra, thanks for joining us and giving us that perspective on your company. Of course, we will be watching out for more developments and, of course, improvements as you suggested. But we'll move on to the final topic of today. And
Can I just interrupt you?
Of course,
sorry, I think the Nifty has breached the 100-day moving average, which we were keenly watching out for. It's trading at day's low. Bank Nifty is also down almost 0.4%, and 10,066 is the mark where Nifty is trading. If you could just pull up the Nifty PSU banking index quickly just to see if there is any impact which has come from the banking counters which were trading weak since the morning. Okay, that's at day's low. The Nifty PSU bank is now down almost 1.4%.
And I think at least technical analysts out there are suggesting that should the Nifty close below 10,100, well, in that case, 9,800 is on the cards. But that's of course at least as far as the technical analysis is concerned. We'll move on to the next topic. And as per a report by HSBC, Indian aviation seems to be on an inflection point with favorable government policies, consolidation, the sector bottoming out of yields and depreciating rupee, and of course fuel-efficient fleets offsetting the rise in fuel prices. But the counters to this are saying healthy gains in the current trading session. And what have been the key factors that play out here? Well, let's get an analyst view here. So for that, we have Umesh Mehta, the head of research at Samco Securities, joining us to give us a perspective on the aviation industry. Umesh, thanks for joining us.
Yeah.
Firstly, let me just start off with the market share. It's mostly about Indigo and Jet. But the question then is, can Jet claw back some of its market share with all the plans that they have? And in that case, how can Indigo defend its market share right now?
Correct. So let's get a proper perspective. Currently, low-cost airlines are having a market share of 66%. SpiceJet and Indigo are the listed space where those stocks are available. Going ahead, if you see the fleets that they have ordered, Indigo has done 3x expansion, so they are in that plan. SpiceJet is planning for a 4x increase in their fleet in next 5 years. Jet has just plans for doubling of the fleet.
Right.
So that's a broad perspective of this structure. So now going by, so let's see, as Warren Buffett has said, the company is having the lowest operating cost will be the one that I will bet. So let's examine. So which are the stocks, which are the companies that are having that
the lowest operating cost?
Correct. So Jet currently is operating at only 6% EBITDA margin.
Okay.
Indigo is operating at around 13-14% EBITDA margin, and Spice, after all the efficiencies that have come in, is doing 9% EBITDA margin. So now things are in place. We have a traction. So this is a broad structure of cost structure. And now if Indigo has planned for 3x and Spice 4x, so I think these two players will do a lot of shareholders' wealth creation. We also think, so one of the important ingredients, why we see that the sector is at an inflection point is because PE multiples have now converged. Right. So the race has begun in a sense. So you've seen this example in tire industry. Tire industry a year ago when PE multiples were around 9-10, all stocks were available at that time, and then the lift-off had happened, and now there is a wide variation depending on who is more efficient and who has delivered more growth.
Right.
Similarly, aviation is at that threshold point. Given that 15-16% passenger traffic growth we are going to see for not for 1 year but 5 years, and the biggest trigger is railways. Government has now become sort of profit center. They want a realistic pricing. And the way they have priced, the fares are currently priced in, I think. So that push will keep on, will make it more, the earnings will become more consistent for the airline sector. And so earlier, China is what? 10x the current Indian capacity. And it is far more convenient and cost effective to fly in China than go by trains. So I think India will also come in that league. Governments, it was basically government's move. Now government wants to develop 40.
Are you suggesting it is a valuation catch-up game and nothing got to do with the environment around? Because this is one sector which is highly dependent on crude prices, which have been volatile in the recent past. So if I were to ask you, why is Jet Airways going up? This is one company, as you said, lowest margins, 6%, highly leveraged. And the concern which majority of the analysts, they talk about Jet Airways is the cost reduction SCRED plan. We don't know how they're going to pay so much of debt. So what is the primary reason for the move that one is seeing on Jet Airways?
Correct. So Jet Airways, I think the primary move, what we have seen, outperformance since last maybe 3 weeks or 4 weeks was the tie-up with Delta, KLM. So I think that now news is already out, and therefore all those things are now priced in. So the strategy that Jet has adopted is expansion, get larger territorial share, and that's how they want to generate. They have their expansion plan. So international fly. Low cost airline, I think that strategy is India, because government has done expansion for 40 airports. So I think when government's will is there, this sector is going to lift off. From we typically say from Bel Gadi, Ghoda Gadi, from tram, trains, and now planes.
Yes,
so India is in that category. That and at valuation, I think 18, 19, 20 PE multiple is nothing compared to what we are seeing.
See the
valuation.
growth, the domestic passenger traffic growth was up almost 20%, I guess.
Yeah,
in the month
around
of
18,
October.
20%.
Yeah.
No, but
when there is durability and visibility, the sector will get solid re-rating.
Right.
And Warren Buffett this year in July 2017 had invested in Southwest. Southwest is trading at 17. So that is also typically low cost airline.
Right.
And we are available at 18, 19. The growth in India is double digit, and they are in US single digit.
You cannot compare the dynamics of Indian companies with their...
No. So what we see is durability and endurability of that earnings. Visibility. Do you see visibility for 5 years, 10 years? And I think in words of Warren Buffett, you can't transport people on the internet. You will require physical infrastructure to shift them. And that was the reason why he invested in Burlington Northern. Trains will be required to transport the freight. So I think the larger dynamics are in place currently. I think, and that's rightly, airline is in lift-off space. Given the population under penetration, the infrastructure development, the bargaining power that they will have, because train fare will rise. So I think everything is in place, and plus valuations are also fair to reasonable.
Right. So Umesh, you spoke about the operating costs for these three major airlines, and you also spoken about expansion plans, which means that in terms of expansion plans and expanding their fleet, that will also require some amount of money that will go in. If you consider both these aspects, then in terms of Jet, Interglobe Aviation as SpiceJet, what is a better bet for you, and which one is not a relatively as good a bet then?
Correct. So they are going to expand, correct? So what? So I think the model that they have low cost airline adopt is lease. And I think lease is very, very safe in terms of, so balance sheet is not strained. And they also know that, look, this is what, so they also run on an operating cost basis.
Right.
So I think, so if that is the case, then I think it's worthwhile to bet on Indigo and Spice. So number one would be Indigo, because that is far more cost efficient than Spice. So these two stock will really outperform in portfolio for next 5 years, 10 years. And I think this can really be next wealth creating stock for an investors.
Right.
Okay, Umesh, I think we'll have to leave it at that note. We're running out of time. Thanks a lot for joining us today and taking us through your view on the aviation sector. But I guess the producer is asking to wrap the show. We'll wrap it up here on this edition of Trend Spotting. Thanks a lot for watching the show, but don't go anywhere. Coming up next is Hot Money with Darshan Mehta.